Now we're going to take a look here as we look at the stock market. We had talked about an early dip. The patterns had really gone from where we thought that the market would fail about a week and a half ago to where it repaired itself, and then the new information really gave us a sense that there was only going to be a couple-day dip, and then the market would be moving up again. We said that last Friday, and that was exactly what happened. So now we're in this rise, and we're going to look at the two scenarios that we see in here as a potential. So we'll switch over from the bond market here to the S&P 500. Again, we are looking at cycle analysis, and in the case of the S&P 500, there is a minor cycle in there that runs around 9 or 10 days, and the dominant cycle runs around 19-20 days. And you can see how they fit together in each of those harmonic families. The minor cycle dips, either they're visible or they're not. I mean, it really would be something that we would be able to be more decisive on cycles that had the clear dips, as you see right over here and right over here. However, you see this one is so strong you barely could get any kind of a dip. So that is what happens. And here you see this dip right over here. Perfect. This got down so low, I didn't think this was going to be that strong, but it was. And then it told us that you get a minor dip right over here and then be moving up again. You see where the lows were right over here in the nested area. That's that green circle. Here you see the same thing happened right over here, and then you saw the same thing happened right over here. So now we are in a rising market, and I have two scenarios in here. Sometimes I put these in. I'm working on something that hopefully in the next 6 months we'll have. It's going to be called the Slim Cloud. I've never announced it before, but we're going to work on an indicator that actually projects similar to what we see in here, where it kind of looks at the top and the bottoms of a range that it could move up in. Now, this scenario right over here is a pretty rosy scenario where you get up and test that all-time high up over there around 33.92. This scenario is a more reasonable and likely scenario where you can continue up right over here. You either test that old high right over there of that high at 32.33, or you then could potentially get up to this area of around 32.60 to 32.70 right in there. To me, this is a more reasonable projection of what I expect, and then we get into this beginning of the corrective period. Now, this cycle right over here is scheduled to bottom as we get to a level down around a time frame down to around the 10th of August. This is the cycle with more risk, which goes down to about the 30th of August. And so that's why I think no matter which of these occurs, the next one out there is the one with the most danger. Where we project to those lows out into late August. So a lot has to do with the likelihood of this rally in here continuing and how far it gets. And then we'll see how this area acts. That's really a key to the information that we can give you. If we happen to turn down and break under this level of 31.27, that would be a disaster, because that would, if it happens fast, it says that the corrective forces from the longer term intermediate patterns are very negative, and that would be telling you we're in the correction. So 31.27, a key number right now. These resistances around 32.33, 32.60, key numbers on the upside. We could be just stuck in here for a while, and then all of a sudden I think it gives way on the downside. That's the highest probability. So if we get this track over here, that's going to raise my downside projections for the correction in August. If we stay in this track over here, I'm going to maintain my downside levels that I'm looking for in the corrections in August, and that would be something that you could see if you watch Future Speak, which is our member video on Wednesday. So that is it. I think a pretty clear look at what we have in here. Momentum in here strong on the upside. It remains so. Momentum on the intermediate pattern strong. The sum of the evidence is that the intermediate patterns are rolling over, and that we're seeing it already happening in the NASDAQ. It's weakening. You can see the breakdown number in the NASDAQ also in future speak. So we have a top pattern forming in there in the NASDAQ. We think the range tightens up in here, and then we fail. That is a look at the S&P 500